fundsupermart.com.
Hello everyone, with us today is Jonathan Ong, Portfolio Manager of Manulife Global Fund Emerging Markets Infrastructure Fund. He will share with us his takes on the emerging market infrastructure sector. What are the advantages of investing in emerging market infrastructure versus the broader markets?
Sure. That's a very good place to start. The main advantage of investing in emerging market infrastructure is, in our view, the fact that it is a lower risk asset class. Compared to general emerging markets and other common funds, our fund will be a lower risk fund with still good growth, and we believe that is a rare thing.
Can you briefly share with us your outlook on the emerging market infrastructure sector for this year?
Sure. So this year, like many of the years to come in the future, we see emerging markets doing well, and that is good for our infrastructure companies. According to the IMF, emerging markets will account for 75% of global GDP growth over the next 5 years. So that's obviously positive for our infrastructure investments.
How much upside do you see, and what are the key drivers?
Sure. The key drivers are, well, there's one, and that is urbanisation, and that is such a long-term driver that we are positive for decades. And the big statistic is that according to some very large organisations, there will be 2.6 billion additional people moving from farms to cities, and every time someone does that, they need more infrastructure. So they need more water, power and transportation, and that is how we get our revenues and profits, and that's why we're positive.
What about the major risk factors for this sector?
Sure, good question. So in addition to the growth, the risk is a key thing, and the main risk, because our businesses are so powerful, is the fact that regulation can change. Because you can really charge whatever you want for water and electricity because people must use it. That's why we like it. I think it's important in this area to have someone who just focuses in on the sector. We have in total over $10 billion in emerging market infrastructure investments, and that helps us have a much better view on the regulations and the risk that goes into infrastructure investment. The other one is demand. So demand risk, because these assets are there for so long, like the road, once it's built, is there for 50 years, and the same with an airport. If you put them in the wrong spot, well, then it's going to be a terrible investment. But if you put it in a place, say, like Hong Kong, where there's more and more people coming, every year, that just keeps helping to generate profits for the business. So we spend a lot of time making sure that we don't have a white elephant or a stranded asset. Those are the key demand risks. And we have specialists who look, what is the best place for the port in this country, or what is the best place for a road? And then once we select it, we have reduced the demand risk for that business.
From valuation perspectives, is now a good time to invest in infrastructure stocks?
Yeah, that's a great question, because right now, probably the most interesting thing from a valuation perspective is that infrastructure, because it's lower risk, is sort of a low beta equity. We are now getting quite a bit of interest from people who used to invest in bonds and cash, but they can't get any returns anymore. And so at this point in time, infrastructure was one of those few assets that is pretty stable, just chugs along, that also has a nice yield. And actually, for the first time in a long time, that yield is better than cash and bonds, which, for us is a good sign.
What is your advice for investors looking to invest in this market?
Sure. So, this market, Hong Kong, is a very interesting place right now. I've been visiting companies, and there are a number of large Hong Kong business people have already put some of their money in infrastructure. So Chung Kong Infrastructure is a company, and that's the one for the Lee family. That's their infrastructure. New World Services is the New World infrastructure investment, and then Hopewell Highway is for that family. So I think we're not saying put all of your money in infrastructure, but because it's a lower risk way to capture growth, we find it helps diversify your portfolio in a very special way, but it is the sort of asset that can help a portfolio. It's not a super sexy asset, but it's a good, stable asset that can also grow for you.